So, welcome everyone to this 10th meeting, I think. So, as always, if you want to write anything or ask anything, put it on the chat or unmute yourself and ask us whatever you want. So, as always, all yours, Dan.
Yeah, nice one. Nice. Yeah, a few reminders actually. Just keep yourselves off mute. I don't mind, as long as you're not causing static. Cameras on, like Gonzalo said, 10-3 guys, come on, we're like best mates at this point. But no, on a real one, there's not long left. It's the final push. Let's be realistic here. It's ending soon. So let's get that W. It's definitely within reach. Yeah, next slide. Yeah, lots has been going on. US stimulus is kicked off. It's just been approved, I think 20 minutes ago. 1.9 trillion. How fun. But with that becomes the risk of inflation. And I think the US 10-year yield, as I mentioned last week, was at 1.4%, it's now 1.6%. So the cost of capital has went up, and that's led to a bit of a slide in the NASDAQ, which is the tech index in the US. It's down 8%, but it has rebounded, which is positive for us. China have targeted a 6% GDP growth for 2021. Bit ambitious, but then again they like had the virus first, recovered quicker, almost expected. Asia as a whole are recovering quite good, for that matter. Oil, crude oil and Brent oil is on a massive high, with Brent oil hitting over $70 because of an attack in Saudi. No production was affected. It was just a very surface level attack, but still, pose a risk, bit of volatility. But here's a big one. I know airlines got brought up last week. General Electric are close to selling the plane leasing unit for 30 billion, which is maybe a sign that they want cash on the balance sheet to maybe pivot into another unit, or maybe it's just slimming down costs. I don't know. If anyone knows, inform us. Yeah, Greensill are on the edge of administration. Now they are, and the Australian government have had to step in. For those who don't know who Greensill are a financing firm who specialise in operational finance. So when a supplier gets credit from someone, they'll kind of step in and provide that gap and bridge that gap, so the actual supplier gets paid. Obviously, there's massive supply backlogs for the past year, and as a result, Greensill have went under. The guy, the founder, has just lost billions of net worth in the space of a week, which is quite funny. Yeah, there's a bit of arguments between Oxford and the EU regarding vaccines. It started to tick along, and they've accused them of this almost poor branding, kind of defacing the company. A lawsuit is pending there, I believe. And then Rio Tinto, they're part of the FTSE 100, a mining company, I believe. They've entered negotiations with Mongolia to explore a 6.75 billion copper mine, which is really positive for the copper sentiment that we have. That was seen on the FT a couple of days back. I'm not sure the progress now, but as everyone knows, business moves quick. So finally, Deliveroo, they posted £224 million loss, despite revenue growing by 54%. That might sound bad, but it is a positive because it's a step in the right direction. Has anybody got any other news that they'd like to share? No? Any news at all, just even opinions would be valued.
I was in my news at the moment, just flooded with Meghan and Harry drama.
go long on the Royals. There's Ben. Yeah, cool. Gotta get them slides back up on LUUTIS. Yeah, nice one. Just next slide there. Yeah, more charts. I will love charts here, don't we? So, a bit more on copper. Sentiment, top right corner. Yeah, the red line is the consensus from the copper bull, so the people who think copper going to go up in price. And the black line is copper's actual price. The bullish sentiment has started to go slightly flat, which is concerning. But there's no material impact on the price of copper just yet, which is good. But as you can see on the bottom, on the x-axis on 2020, it's just been an exponential climb. So we've got to think logically where the resistance is going to hit and when. Personally, I don't think it's going to hit until the next year, which keeps us safe. Due to the official shortage in I think CPUs, which is good. And on the top left, you can see the red line with the copper futures and the black line being the actual price of copper. Yeah, again, small dip, but no material impact on copper just yet, which is good. And on the bottom is agriculture, specifically grains. Yeah, this is really important because inflation tends to have an impact on the price of food, because more dollars are chasing, or more pounds are chasing the same amount of grains in this case, so price goes up. Yeah, again, a very exponential rise in price, and we really want to capitalize on this like bullish trend, which is good, and it's usually not that volatile, which provides a bit of safety for our tech-heavy portfolio. But yeah, some nice charts to look at to kind of visualize the trends, if you will. Has anybody got? I know I've just glossed over that quite quickly. Has anybody got any questions? Just take yourself off mute or chuck one in the chat.
I'm just wondering what time period are these graphs over?
Yeah, so you can see at the bottom, 06 all the way through 2020 for agriculture, and then for copper on the top, you got from 05 all the way through to 21. So a nice broad timeline lets you visualize the full picture.
Yeah, 100%. Cheers.
Yeah, nice one. Next slides. Yeah, nice one. Bitcoin, absolutely crazy. Blue line's moving average. Black line is the price. 2012 is, well, late 2011 is when Bitcoin came to market, and it was worthless. Now it's worth 57k today, as I think Jamie or Ben noted. Insane. But you can see the moving average in the blue is way behind, which just shows the exponential rise and the almost risk of a massive correction of Bitcoin. I think this goes for cryptocurrencies as a whole. We've seen a whole host of ETFs come to market, and Bitcoin-specific firms like MicroStrategy issuing bonds of 900 million recently, which are non-convertible, and this gives MicroStrategy $900 million in cash to just go out and buy Bitcoin, which is insane. And then Tesla invested 1.5 billion, and PayPal and Square are also on this trend, facilitating payments. And Coinbase is going public this year, I'm pretty sure. I think cryptocurrency is looking very bright, but there's a lot more risk involved with banks kind of not conforming their mandates to them. They're quite traditional in that sense. Ben, I know you're pretty experienced in this. Do you have any comments?
Yeah, I definitely agree with what you're saying around sort of the risks involved. However, it's a weird one, like, because the market is like totally emerging now. It's still it's still a fraction of that sort of the total financial industry as a whole, like something less than like 1%. I think there's a website which like shows all the world's money markets, and I think it's grown since then, but even still compared to sort of like the derivatives, like the housing, the real estate industry, like all these different global markets, like the value of it is still like minuscule. So it's a tough one, really. Like I think Bitcoin's started becoming like a bit of like an e-gold almost. Like the attitude towards it is similar to how it would have been historically to gold. And like I said, with how emerging it is still, I think there's going to be a lot of these different coins that do fall off, and they do see some very heavy crashes in the next couple of years. But I think there's going to be, if you pick your coins wisely and you pick your projects that you like and invest in them, I think there's definitely going to be a lot of like potential for like very huge gains. So it's just about sort of doing that due diligence and making sure you're picking the right project. And a lot of these people call them like shit coins. Like Doge, that's what people like refer to it as, because it doesn't really have much usability in the actual real world. So yeah, it's very interesting. But like I said, who knows what could happen.
Yeah, definitely. I think for those who are aware of like the dot-com bubble, the dot-com bubble was formed because the rise of these internet companies which they weren't generating profit. Everyone kind of went crazy over them because it's the internet and it's the 90s and it's this big craze, right? It's new tech, it's this and it's that. But when people started realizing that these companies don't have any scope for usability, or they're not generating a profit because maybe costs are too high or the tech's too futuristic, they fell off a cliff essentially, big time. If you're not aware, just type in .com crisis of the noughties/90s. It could be drawn, similarities could be drawn to cryptocurrency. Obviously, time will tell. Yeah, I think that really covers Bitcoin there. Do you want to just get them slides back up, guys? Please, mate. Nice one, cheers. On the note of due diligence, Ben, I'm glad you brought that one up. So we're looking at the type of equities that people can invest in. It's really important because a nice diverse mix can provide real benefit and real safety to a portfolio. So I think if you're a personal investor, I think I'll definitely take note of this. So micro caps, we'll start with the smallest, we'll head up the largest. Really simple information, all the info on the slides. Numbers sound big, they're not that big, let's be honest. It's finance, not the corner shop. Start off with a micro cap. A company with a market cap of under 300 million. We've got micro market capitalization. We've got a small cap, which is a company with a market cap of 300 million to 2 billion. Sounds big, it's really not. It's definitely built on a micro cap. Quite a large difference, I'd argue the biggest. And then we've got mid caps. So we've got a company with a market cap of 2 billion to 10. We're growing in size here. There's genuine scope for the company here, and there's a bit of momentum getting built compared to the past two. And then got a large cap, companies with market caps of 10 billion plus. These are the big boys. These are like the Nasdaqs. These are the FTSE 100s, the blue chips. Yeah, I mean, Apple, I know from the top of my head, has a $2 trillion market cap. Yeah, due diligence is obviously needed, but microcaps tend to be a lot more risky than the larger ones because the liquidity is thin. Not a lot of people are buying or selling these, and because the company's smaller, there's a lot more risk associated with administration, for example, or the ability to scale up and bring more products to market. There's usually less scope for innovation as well. But in general, there's less information available. And so with the lack of information, investors usually associate higher risks because they don't know what they are investing in ultimately. But yeah, just to recap, micro caps, small caps, mid caps, and large caps. Super simple to understand, but it just shows the range of companies that a portfolio could consist of. And it's important that you diversify and almost have a mix of them all. I would say. Next slide, please.
Dan, in our portfolio at the minute, what is kind of our allocation in terms of this small cap, mid cap, and large cap? Kind of, let's say, broad idea.
Yeah, definitely, man. Good question. So very broadly speaking, we've got a lot of large caps and a few mid caps thrown in, and I think we might have one or two small, but no micro caps, because micro caps are very hard to trade, because of the liquidity that I mentioned. So it's very hard to actually have an order go through on them, and that is an issue that me and Gonzalo have struggled with. But yeah, it's super easy to trade. I'd say maybe 60-70% of our portfolio are large caps, and then the 20 and 10 are mid and small. Yeah, I think I covered this previous. Why is this important? Smaller caps are less liquid, higher risk compared to all the siblings. The company is seen as less stable and less reputable. The easier you can buy and sell a stock, the more it's going to get traded. It's pretty simple. But with more risk comes more reward, is to have the headroom to grow, unlike large cap stocks. You're never going to get a large cap which is going to really outperform a mid cap in terms of growth. A mid cap has a lot more room to grow. You're not going to see Apple just burst through the ceiling compared to a mid cap, like Argo blockchain, for example, which is, I think, FTSE listed. But this is purely because their value's known and it's priced in. Everyone can take a look at Apple's balance sheet and realizes that they're worth their money. They've got a really rich balance sheet and known income and known market. But when investment, it's key to have a diverse set of holdings if you need to maximize alpha, which is profit. And if you do so in the right caps and the geographies, you're going to really see that reward. But it's difficult because the risk needs to be managed properly. And it's really about selecting the right percentages of small caps, micro caps, mid caps, and large caps. But that's a personal preference at the end of the day. Next slide. Yeah, strategy update. I want to quickly put a question out to everyone here. Has everyone been tracking the market or maybe seen the market today? Just take yourself off mute if you're muted.
Just a quick question. I wasn't here at the last meeting. Could we spend like a minute just talking about the new strategy? Sorry.
Yes, definitely. So it was pretty mutually agreed. We're going to realise some profit and start winding down some positions to add to the cash pile, and maybe take a bit more risk, essentially. But with that risk, we're gonna invest a bit more into our copper miners, the grains, the real estate investment trusts, so the REITs, and maybe one or two blue chip tech stocks to provide that backbone of support, whilst we allocate smaller amounts of capital to higher risk equities, which maybe are more cyclical, like airlines, for example. And we've decided on a rough set of equities to invest in. So you can imagine IAG, so International Airline Group, which is British Airways, EasyJet, Carnival, and those. But we've had to kind of pick and choose carefully of winding down at the right times. I said I would wind the positions down when the Nasdaq was sliding. The Nasdaq's the tech index, by the way. And because it was dipping, luckily I didn't sell because I thought we could really benefit from the bounce. the bounces happened today. I think Tesla's up 20%, Palantir's up, Neo's up, and so the losses aren't going to be too bad or as bad as previously thought. Key holdings have been profitable, but obviously some haven't, and it's all about maybe damage limitation. But the strategy remains poignant. It is going to be implemented soon.
Okay, cool. Thank you.
No problem. Let's get the slides up there, console, please. Next slide there.
This is the last one.
Last one, easy. You might as well take this one down then. And stop sharing the screen. So yeah, I think today was all about just learning about the different casting, maybe getting an update on the news, how that impacts us. Obviously the strategy is in place. It will be wound down. Positions will be entered. I've done some due diligence on some holdings, such as Lind PLC, which is an industrial gas group with a focus on carbon capture. And Jamie, as soon as airlines start going, as soon as the world gets back to normal production, there's going to be a lot more carbon produced, and that will force the carbon price up for people to pollute. And these carbon captures collect it and sell it. So it'll be an indirect benefit.
I heard, I think on the FD news briefing, that carbon levels are already higher than they were before the pandemic.
Right.
So I don't know if has it seen any appreciation so far?
It depends on where you look, because there's different carbon capture, different carbon prices for different regions. Europe have a set rate, and then North America have a set rate, and then obviously Asia and South America. I was focused on the European carbon rate because I know that dipped recently. I don't know if you have any more colour to that story.
No, I thought it was surprising that the carbon's already higher than it was before. So, yeah, I mean that sounds like an intuitive investment.
Yeah, it's hopefully one others don't think of. Just a little update with other teams. Your PM does do his extra research and relationship management. Went on a run with Greg today. Everyone knows Greg, Mr. ETF. He was down 45%. That's unbeaten for those that attended.
Did you say since the last fund meeting?
Yeah, so he's down 45% total.
What, additionally on top of the last fund meeting?
No, just in general, so he's still halved his value of his million. That little fucker is invested in GNE, and he's at 800k now from 450.
Yeah, I saw it's like above $300 now again.
Yeah, we really need to be keeping an eye on.
Yeah. If he wins, that would be such a kick.
The greatest comeback of all time.
I swear to God, if he wins, I'm just going to quit finance.
Yeah, it's gone. He's back.
Yeah, I'm back. Don't worry, I'm back. I think.
How are the other do you know how the other teams are doing?
I know Yusong, who was with Greg, hasn't really been active in management. As far as other teams, they were the main ones. No, they weren't. They were the main losers. Sorry, who we really pushed to the side because they're not going to win. Let's be honest. There was one team that was catching up. We were at 22%. They were at 18%. I think it's Kai and Taha, or Robbie and Taha.
Yeah.
I know their portfolio fairly well from the top of my head. They're big Apple. They're massive on Apple with a lot of capital allocated. So whenever Apple dips, they're going to be taking a real hit. We've got Facebook as well. So any negative news with Facebook tends to push their portfolio down. I know Alexander and Jacob, so the fund managers, are big on Tesla, Neo, and Carnival. I don't know if they've bought or sold it or reduced sizes or realised profit, but they've got a very large cap portfolio, not much risk involved, I would say. Yeah, I think can can definitely keep an eye on other people's portfolios to an extent. Who's Carnival? So we really need to be careful of the positions that other people are taking, because they could really start turning into something. We all know the market's been a bit backwards this past year, and JME is just a prime example. So yeah, that's most of what I have to say. Console, any thoughts?
Kind of what you said last week, or what we spoke last week about putting a lot of money in some kind of very volatile stock or group of stocks that would, I don't know, rise a lot in the next 2-3 weeks. I don't think, I mean, we just need to think about the stocks and go for them, because I think it is the only way that we can make some last profit, unless we just want to keep the money and that's it. That's something that we need to decide between everyone.
Yeah, I'm gonna open that one up with, I think if we were to realise every position, whether that be a profit or loss, it would be a bit stupid. We need to keep some skin in the game, because if you're not moving forward, you're moving backwards essentially. And the only way to move forward is to have skin in the game.
Agreed. Do we incur transaction fees when we buy and sell?
No.
Okay. And I was just wondering, because something like IAG I've just looked is up 38% for the month, and so like they've already experienced, like obviously they've still got more to come because they were down so far, but is it not worth, if we're taking a bit of higher risk, going to something that's maybe a bit more niche, something like hospitality, or like I saw that, I didn't realise that, I don't know if anyone's used Hostel World. I used it for my travelling. It's just something super niche that could really benefit from the lockdowns ending, and is potentially higher risk, but hasn't appreciated so much over the last month as people have kind of jumped on the bandwagon in a similar sense like the IAG has.
That's a good chat. I'll tell you some.
Go for it, Dan.
Yeah, I mean, I'm pretty sure Console was part of the previous years of the fund. There was one, because it hasn't always been set up like this. It's always been divided into sectors. So financial institutions, commodities, FX, like REITs, alternatives, tech, etc. We've got a very broad line of focus. We can do whatever we want, essentially. And some kid in the financial institutions group was Syrian, and he was hell-bent on this Syrian bank that he thought was amazing. And Shakara, you won. No one else knew it. No one else knew the stock but him. And he done his due diligence, done some micro research. Said, hell with it. I've got conviction that this Syrian bank is going to do well. And he won. So.
My guy knows what he's doing.
So, Jamie, if you go ahead.
Well, I was going to say I could potentially have like a something which is it's not too volatile. I think it'd be fairly safe, but I think it could have the potential. It may or may not like go a bit crazy in the next couple of weeks. I've been messaging them on Twitter, and they said that they're announcing full year results either next week or the week after. They're fairly small, and, like they don't get too much volume. It's listed on the it's listed in the US. It just says US. It doesn't say which exchange. Well, you carry on, and then we can come back to this.
No, sure, yeah. But yeah, Jamie, I think that's a good shout. A very nuanced company that maybe that flies over the heads of other people is worth a look. I mean, I know from experience Lind PLC, the industrial gas / carbon capture company. I found that by accident. I was looking at ETF inflows for the global clean energy ETF that Haley holds, and because I hold it as well. And I was going through the holdings, and I was going through like the profile of each company in it, and I seen one of them had just launched a new carbon capture technology, and so I went on like a massive rabbit hole of carbon capture. And Lind PLC had been quite active in the M&A space as well, like merging with companies, acquiring others, multiple projects with others, and came across by accident, bit of research on that company, good balance sheet, etc. Good future outlook on the market, and thought, hell with it, I've got a bit of conviction.
I did. I came across something on a similar kind of rabbit hole, but I haven't done any background research yet. But there's a company that is UK listed called ITM Power, and it kind of it just links to what we were talking about a few weeks ago about how there's a big kind of hype around hydrogen, the government's 10-point plan, and who knows what will come of the hydrogen, the hype. But I mean, there probably will be a hype this year, and so this is like as far as I'm aware, a leading company in terms of getting energy solutions from hydrogen, and just where it is now, like it's down 24% for the month, so it could be something to look at if
Just
the financials check out.
good spot. Just ask yourself this whenever, but this goes to everyone by the way. Ask yourself, why is it down or why is it up? And with a few thoughts, you'll usually arrive to an answer. I mean, GME, I hate to bring it up. GameStop, love that. You might think, why have they been resurrected from the dead? It's because they've pivoted to a more e-commerce position. Logic has it in COVID world. E-commerce as well. Shock horror. And it's just captivated everybody's attention again. So not everything happens for a reason, for the most part, is what I'm trying to say.
But just like some speculation around it them pivoting to e-commerce doesn't really deserve like a 100% increase in a few days.
Yeah, that's what I was saying as well.
So as well, yeah, it might be intuitive to some extent. It also makes no sense in another sense.
Yeah, I think 100% is a bit exaggerated. I don't know if it's worth that much. But I'm not going to be taking a short position. Put it that way.
Yeah.
Amin, have you got any thoughts at all?
No, not really.
Nothing at all. Even very surface level things, thoughts, suggestions, maybe.
No, not really.
Cool. And Tris, what about you?
About what? Because we talked about a few things.
What are your thoughts in general about the market this past week? Have you got any kind of like companies in mind, or maybe a focus plan?
Yeah, obviously, like airlines, as I told you, like past meetings, but I don't think they are worth investing for like the short term. If you're gonna invest in those, you're gonna do it for the long term. I think.
Do you have an idea for the short term?
I mean, I've never looked into like short-term investments because I'm quite new to that. Like, I don't know how to do the speculation, to read the speculation for the short term. I can do the long term because it's easier for me. But especially for a few weeks, that's you can just buy a dip and resell it in a few days. But yeah, don't have a clue about a specific company for the short term.
No, fair enough. Appreciate the honesty. Luke, mate, have you got any opinions, thoughts, anything of interest?
Not too much. I mean, just the Biden's overall stimulus package. Seems to be a lot of money coming out the US at the moment. Also, the oil hike prices because of the attack on the Saudi facility. So the rippling effects of that into some markets, but I haven't been too on top of it the past few weeks. So
I've got a potentially more short-term idea, and it kind of goes against everything that I wrote in my FinSights article. But Airbnb, seeing as the first stage of restrictions, like kind of falling away, will be more national travel. And how do people travel to other places within the UK now? It's mostly through Airbnb, and it's I think it's April that if you're self-catered, if it's a self-catered accommodation, it's allowed to reopen. So that could be a potentially interesting idea. I just looked at I mean, like you said, we need to think about why they're down, but they are down 13% for the month. But it could be something that's of potential interest despite their huge debt.
Do they project very like forward-facing revenues at all, or are they very present?
No idea.
No idea. You do know what I mean, though, right?
No.
No. All right. So, is there revenue in the future, or is there revenue right now?
Well, I guess to some extent the future, because people are booking for weeks in advance.
But that'll be why they're down, because the 10-year yield is risen, so it's going to discount the future revenues by that percentage.
Right. I see. Yeah.
Yeah. Gonzalo, I've just put a link in there. It's from a chart. The chart. And this is about 10-year yields versus price, and so about inflationary pressure. If you could just click on that and share your screen.
Just a sec. Where am I? Here.
This may be a dumb question, but
There's no dumb questions about that.
a treasury bonds fixed rate or variable rate, or can you choose?
Variable. The government control the rate, the yield that they can give. Yeah, if you just click on that chart there. Yeah, so this is where I get my charts from. They're really easy to understand, and the guy who runs it, called Callum, he's really friendly, will really explain stuff in depth if you need. Very experienced research analyst. I'm on LinkedIn, top-down job. But US treasuries. So the blue line is the price indicator, and the black line is the 10-year bond yield. You can see there's a very clear trend emerging. The prices are looking to increase because more dollars are being produced, chasing the same amount of goods. And logic will tell you that the price will go up to mirror that. And that is called inflation. And the bond yield follow this very closely. And it would be very logical to assume it's going to go higher. And luckily for us, that doesn't matter too much because of the short-term nature of the time left. But yeah, as you can see how Callum has described it, following the COVID crash, and in particular the global monetary policy push, we've seen a lot of quantitative easing. And the combination of the extremely depressed risk appetite, so people don't want to take risk. So essentially the central banks have had to kind of act by giving away loads of money. People have took the money out of the market, they don't want to be exposed to risk, and they've sold off their bonds. People have sold off their bonds, which is bad, because that's where the money is coming from for the US to lend. And when people don't want to lend, it's going to cause liquidity problems all around. And so that's when global banks stepped in and bought them up. And that's what Callum, in this case, is referring to with central banks stepping in. But we've seen that phase and it's over. And this is when inflation becomes a very clear risk, indicated by the almost exponential rise after mid-2020. So that is just something to note. That might be quite complex, so has anybody got any questions?
Why were people taking their money out of bonds?
Because of COVID, they wanted cash ultimately, and because bonds offer a yield over a duration of time, they didn't want to wait for them payments. They just wanted to recoup their capital in full, so they can have it in their accounts.
Okay. And so say there was loads of people selling their bonds and no one really buying them, so central banks had to jump in and buy them.
Yeah.
If they just didn't do that, then there was no one to sell the bonds to, so surely it would have been fine.
Well, if everybody's selling the bonds, well, logic suggests when there's more selling than buying, price goes down. Which for equities is worse, but for bonds it's even worse, because the point of a bond is to raise capital. It's part of like debt capital markets, right? So when people can't actually kind of take out debt to maybe finance a business or, in this case, introduce money to the US economy, the amount of dollars is going to dry up quite drastically. And if you start taking dollars out from an economy, it's going to collapse. And so when people aren't willing to give that money to the government to put into the system, it's bad. So central banks have then had to say, okay, I'll buy the bond, I'll lend you money.
Right. Okay. And how have other central banks found the money to buy these bonds?
Do you want the complex answer or do you want the funny one?
Funny one.
They've got a money printing machine.
Yeah. That was what I had in my intuition, but
yeah.
Right, so that's just further inflation then, is it not?
Yeah, because more money is chasing the same amount of goods.
This is why you buy Bitcoin, etc.
Shut up, Ben. But no, on a serious note, Ben is right. It's the same as gold. Gold is seen as an inflationary hedge, right? There's only a finite amount of gold in the world. Same, and we'll compare this to Ben's case because there's only 21 million Bitcoin ever. And so when there's only a finite amount, demand in this case was going to rise, and so the price goes up. There's more buyers than sellers, and that is essentially why when these finite goods are seen as an inflationary hedge, because they rise when inflation rises.
Why is gold so suppressed at the moment then? If it's an inflationary hedge?
Yeah, it's a very. I posed this question last week. It's a very baffling phenomenon. I don't know. Gold should be rising right now, but I think it's important to note that it hit over 2K last summer, which was an all-time high. And you got to think, with 1.9 trillion coming into the system now, it will be coming into the system in the early hours of the morning, I think. in America, there's a lot more like risk going to be taken with that, and you want to move away from risk-free assets, bonds, for example, or seem like lower risk compared to equities, and gold, silver, and you move into equities, more specifically speculative equities like Tesla, like Neo, like Palantir, because the risk-free rate of return, it doesn't go down. You've just got more money to waste. You've not earned that money, so they want to take more risk. And that almost explains why these equities kind of went straight to the moon this year.
Okay.
I'd like to just add that the this 1.9 trillion stimulus is 180 billion more than the entire cryptocurrency market, and that's been printed overnight.
Yeah, bit of a perspective there. It's a lot of money.
Not good.
Is just going back to the gold thing? Is there anything to do with how gold is controlled by central banks to an extent? Like that is where 99% of all gold reserves are.
Jamie, I'm really glad you're asking these because I wrote an essay on gold and I got an 84% in economics. So I actually can speak from experience on this one for the first time. With gold, the only people who control it are the miners. There's only a finite. No one can control how much gold is in circulation apart from the ground. We can't just magic gold out of thin air like money. Money is just paper with a few fancy images on it. And so whether miners are just flooding the market right now with like supply is potentially an issue. But yeah, you're right. A lot of gold is controlled in ETFs by central banks. Mostly as a hedge against inflation. To exert economic power over other countries. I know India, for example, dipped into their gold reserves to pay off COVID debts rather than like raise more debt for the country. They just dipped into their gold reserves, which was maybe wise given the price of it, and that's what they did. But a lot of gold controls peer-to-peer, so it's a lot of, well, I want to sell to you, Jamie, and maybe Jamie wants to sell to Ben, and if Gonsol wants the gold off Ben now, it's a lot of trading peer-to-peer. But for the most part, it's a very valuable market, very large, and it will take a very big amount of like volume to shift the ticker, if that makes sense.
Right. Okay. And I don't know whether this is just getting on a bit now, but
Go for it.
is gold over leveraged? And I don't know whether that's the correct term, but like,
yeah,
when governments say like most of the gold is with the US central bank, and when say like India buys or an emerging market like China buys 10 billions worth of gold, right? It doesn't actually move to China. It's still within the US central bank, but there's nothing to really stop the US from then selling it again to India, and because the gold's not moving anywhere, it's just like a number on a ledger. Is that the case? Do you know?
Yeah, almost. I'll give you a good case study. Venezuela, you know who Venezuela are. They kicked off at the UK in the Bank of England because they sold their gold.
Venezuela sold their gold.
The Bank of England sold their gold.
Right.
Yeah. In Venezuela are on a massive hyperinflation line, as you might not be aware of. But in a sense, do you understand what leverage is?
Yeah.
Right. So tell me what leverage is, please.
It's when you trade something based on a loan.
Yeah.
So it's effectively something that you don't have. Something's over leveraged when the fundamental underlying asset is a fraction of what is the value of what is being traded in the market.
Yeah, correct. So if I give you, I don't know, I give you 50 quid to trade with, alright, but then I don't know, I give you 100. You're levered 100%.
Yeah.
I will only describe you as over levered when you principally can't pay back that loan, if that makes sense.
Yeah.
So until someone physically, I don't know, is levered on gold to the point where they literally cannot get that gold back to pay that leverage, then they're over levered.
Which technically would be the case, right, with the gold market if everyone asked for their gold.
Yeah, I'm pretty sure, because a lot of people I'm going to get a bit more technical here. A lot of people will lock in supply through derivatives, through options.
Right.
To say I will pay this much at this price, I want this much at this price, and they use that as a hedge to kind of lock a price in against the risk that the gold price moves up. And in that case, they've hedged the risk really well. They've gotten gold for cheaper. But when you look on the opposite side of it, and they'll say, well, all right, I want gold. I want a kilo of gold, we'll say at $1,500, right, $1,500. But then gold price dips to $1,400. They then paid $100 too much over spot price, like over the market price. And so they rely a lot on that. And you just mentioned a bit of like arbitrage, like kind of taking advantage of the pricing between the markets. That doesn't really happen because gold's so universally traded, and so any opportunities is just taken up in like in a split second. Yeah, just a quick one. I'll stop there. Thanks for an gold. If anyone does want to drop off, and I'll not bore you with the gold conversation. As interesting as it is to me and Jamie, I appreciate it's not of interest to everyone. But I just want to thank you for your time, and if you want to stay on, have a chat. If not, have a good evening. And I'll catch you next week.
I'm gonna go. It's pretty late here. So good night, everyone.
Thank you.
Thank you,
Have a good-
everyone.